This is Rod Kusin and Spooman for Risk on Friday, September 9th, 2010. All times on the chart are Central Standard Times. We're introducing a new indicator which will allow us to recognize where the Spoos are going to go, where the ES contract is going to go before it gets there, as well as give us a basis for setting up our trades. Now, this indicator is in the early stages of development, but we just want to demonstrate what it is capable of doing. It's not fully coded up. Much of what we're going to discuss today has to be done manually, but ultimately it will be done automatically. So what we're going to do is just show you a few of the things that have happened so far this morning, and then we'll talk about what's taking place live. And I'll start off with that. What we expect to occur here, we're in a short trade, and we're expecting that these red lines here are going to get hit. They are associated with price levels that are roughly around 1101 to 1101.5, I believe it is. In any event, that's the big move that we're expecting, a drop back to these levels. So let's go back and look at why we're saying this. And we're going to go back to where we started this morning, way over here. Oops. Okay, let's line this up. Okay, now this indicator, and I obviously am not going to tell you what this is, but I will tell you just a few things in principle as to how we read it. Number one, we have two primary thresholds, an upper threshold, which is this line, and a lower threshold here. I'll tell you what, I'm just going to color these, make it a little bit more obvious. All right, so short trades cannot take place when the indicator is above the line. They can only take place when the indicator is below the line. Long trades need to be above the line, not below the line. That's one principle. Secondly, the slope of the indicator has to be in agreement with the trade, and the color of the bars have to be in agreement with the trade. Yellow and magenta are negative slopes. Green and white are positive slopes. Some bars are predictive. This bar here, and I won't tell you why, but that bar predicted that this price level would be retraced to 1101. And as you can see, that did occur. This bar here, let's line that up, associated with this bar here indicated a retracement back to that price. It too got hit. It is what we often refer to as a setup bar. Setup bar occurs in advance of a short. So looking to take a short trade as the market moved up and then finally dropping back down below this line, the threshold line. However, that strong move up also suggested the possible retracement right back up to that price level, which in fact did occur. And we knew that just from the pattern of this bar. Now let's move forward a little bit more. Now we have another setup bar right here. All right, that's a good setup bar, very strong setup bar, indicating a retracement back to that price level after the Spoos move up. And they had nice strong move up. Okay, now we wouldn't short this here. We're not going to short it here. We would wait for the indicator to drop below the line. See how it did that right here? And then it got negative. This is a positive color. We don't short that. We short a negative color, which is right here. So, boom. That's where the trade would be taken. And once we have the code completed, this will be done automatically. This is the reason why. Again, that doesn't tell you much. It's just that's how we read this indicator. So this would have been a real nice trade. A nice short, okay, getting filled somewhere around 1103 down to 1101. So a nice couple of point trade, 8 ticks, predicted in advance via the new risk indicator. See what else we could find here. Now this bar here, associated with this gray bar here, that was also a predictive bar, indicating a retracement back down to 1100.75. So as we move up here, let me see if we have a setup bar here. I don't think, yeah, it's right there. Okay, there's the setup bar. Okay, so we look to short, take a short, as the Spoos move up, and then the indicator drops below the line. So here again, right there, oops, right there is the short. And move back to the line. Now, notice what else happened here. We had some bars that came in that indicated the Spoos were going to move back up. Here and here, as well as here. So if we were in the short trade hoping for this thing to come back down and we see this happening, we have to take some strategic action to protect our profits. Make sure we don't take a loss on the trade because we have indications Spoos are coming back up against us. Another thing you could do, just dump the trade and go long. Now ultimately, by the way, that would have been an important thing to do because the high here was 0275 and we came back up and exceeded that. But you knew that in advance. Okay, here was 0250 and you knew that the Spoos, as they dropped, were going to come back. So if you were in a short, there'd probably be no reason to hold on to it. Get out because of the fact that that information was telling you of the a strong probability that the Spoos are going to retrace. So that's how you use the information. Now, did we have any shorts in here? Didn't have any shorts. In fact, we just have indication that the Spoos were moving back up again. All right, so we're not going to take a short unless we've gone higher. And as you see, we obviously did. Now, let's look at this move here. Okay, there's our setup bar. Let me just draw that for you here. This is the setup bar. We expect a short. We got to drop below the yellow line, which we do right there, with a negative slope. Okay, we're not shorting it here. Okay, let's see here. Well, actually, pardon me, we could have taken a short trade there or here. Ultimately, we came down and we struck that price level. Now, any indication that the Spoos were going to go back up? Yeah, right in here, right in there, the Spoos are going, pardon me, the indicator is going positive. So if we're in a trade short, we don't have, we have indication here of a potential move against us based on the indicator. So if we were in a short, again, we have to take a strategic move to protect our profits. Tighten the stop, go long, however you want to interpret it. Now, let's look for the setup here. Oops. There we go. Right, there's your setup bar right there. So that's indicating that we should see a retracement back down to that level, which we see takes place. Here's the setup bar. We're going to look to take a short trade as we drop below the line. So here's one place where we could take a short trade, because we also had a setup. We had expectations of a retracement back to that price level, which we did see. And then once again, it moved up just a little bit higher, drops below the yellow line for another short in here. Let's get this right. Okay. Now, another caution. This bar indicated a retracement. So again, if we're in the short, we've got to take appropriate action so we protect our profits. We still have these retracement lines below at 11:01, so the better trade here, or the best trade, hopefully, would be to get in a short that takes us down to that level. So let's now talk about where we're at right now. Extend this line. And we really haven't had too much taking place. Let's now go back to our indicator and let's find out where we're at here. Okay, we've got another setup for a long here. There's another setup bar. It's not much, but there it is. That green. Here's the setup bar. So we look to take a long trade as the Spoos drop and then go positive, which is what they do right there, there's the long trade. Now,